Thank you very much, Tim, and thanks everybody for joining in for this brief presentation about our company, The Agency. As you can see up there on the first slide, showing the map of Australia. We might just skip to the next slide if we could. Yes, we're a truly national real estate business, and we're a different business. We've structured our model different to the vast majority of the Australian real estate sector. And that's really come about because the leadership team at the agency has worked, myself included, in leadership positions in other businesses in the industry. What we saw was a gap in the way that real estate services have been distributed throughout the country. And as I'll show in a later slide, the commission pie, the market is an enormous market if we can manage to increase that penetration. Currently, though, this slide here shows that we are distributed through 5 states and territories. We're significant in Western Australia, where we have about 35% of our business domiciled in Perth and servicing the entire state. We're also very strong in the East Coast, operating in Queensland, New South Wales, the ACT, and also Victoria. Most recently, we've grown our business into new communities. We've established a business in the community of Toowoomba, which is regional Queensland. We've also just established in the ACT with a very strong and rapidly growing business. And we're also just penetrating now into the northern beaches of the Sydney metropolitan market. We currently have about 1% of the Australian market. And I guess an investment in the agency is really backing the leadership team to increase our market penetration. Important on this slide is those red dots don't necessarily represent offices. And this is an important point to make. These represent the regions in which we operate. And interestingly, that one red dot over in Perth represents the one office that we have in Perth. But that one office actually is and so described to the old-fashioned way of doing real estate, which is a real estate premises on every street corner in every suburb of a community. We don't believe that real estate is transacted in offices anymore. Having said that, we do operate large, functionally appropriate hubs where our agents come to collaborate and then go out to service the communities around those hubs. The benefit here, of course, is retail street locations not only have long-term leases that are very expensive, but the fit-outs on those businesses, on those offices, can add up to $600,000, $700,000, $800,000 or even $1 million. That's not necessary. You do need somewhere for our people to collaborate. And they're in, as I say, functionally appropriate hubs. We believe that real estate's largely transacted here and face-to-face in the communities in which we operate. That's one major difference in the operating model that the agency has. The other difference, of course, is the Australian real estate sector, and most people have probably experienced this, is dominated by the large franchise brands. Now, franchising has been around for many, many decades. And as I said, it is dominating the Australian sector, which is highly fragmented. We're not a franchise. We don't believe that you need that layer of ownership in between the company, which is the agency, and the real estate transaction conducted by the real estate agent. We contract directly with those agents, with those 365 agents that we currently have in our business. In the old-fashioned model, the franchise system, you have an ownership level interposed into that transaction. That's the vast majority of the industry. Some of the larger franchise groups, you have some 700 to 800 ownership groups, all different with their different views on how businesses should be operated. And as a result of that, you get differing levels of service. I'll also talk in a moment about why agents are attracted to our business and why we've been able to manage such rapid growth in the last 2 years. And that is around this model, which is, as I call it, a direct model. Thanks, Tim. This is the industry in which we operate that I referred to before, and it's by far and away the largest industry in Australia. $9.6 trillion is the value of the Australian residential sector. In fact, the most recent numbers out this week from CoreLogic demonstrate that it's grown to 9.8 trillion. In terms of relativity, almost 3 times the size of the Australian superannuation sector, or more than 3 times the size of the ASX, and over 10 times the size of the commercial real estate market. There were 653,000 sales in the calendar year 2021, representing just shy of $500 billion. And bottom right-hand side of that slide there shows that the market available to us in terms of commission income is $7.4 billion. Now, we thought we had quite a good year in 2022, where we increased from 49 million to 81 million, and that was a 65% growth. We are growing rapidly, as I mentioned, but bear in mind, and we're heading now toward about 110 million for this financial year in terms of gross commission. Just to restate that is 110 million out of a total addressable market of $7.4 billion. As I said, an investment in the agency is an investment in our leadership team to grow our market share into that very attractive market. Thanks, Tim. Just a couple of key indicators how we measure our progress, and this was highlighted in the most recent half-year results. The first set of columns there is gross commission incomes, and this is the aggregate of all of the commissions that our agents generate during the period. And you'll see there for the half years, we've had very strong growth, up 39%, from 38.1 million to 52.9 million in gross commission income. 52.9, that is the number that I was referring to before, that we're on track for circa 110 million in this financial year. And that is, as a proportion of the total Australian industry, just less than 1%. The Australian industry, 7.4 billion. In terms of the value of properties sold, again, very strong growth in the half year, up 41%, 3.1 billion, probably tracking currently about 6.5 billion in total gross sales value. The number of properties sold up 21%, and our number of agents for that period there, 16% growth. We're recently increasing that number due to the attractiveness and the increased communication about our business model. We're probably on track to achieve about a 30% growth in our number of agents year on year. Thanks, Tim. I mentioned before about our model being different, and increasingly as real estate agents in the country, and there are circa 40 to 45,000 real estate agents within the Australian market at the moment. Increasingly, as people are aware of our model and the attractiveness of it, you're seeing them join it. Because we don't have the added infrastructure that I mentioned before of offices and the requirement to allocate capital, we're able to pay a higher split to agents, and we're also able to then reinvest additional capital into our business, marketing, etc. That is an attractor for real estate agents, and increasingly they're seeing that they can be more successful with our business being a direct model. Thanks, Tim. Again, just going to the half-year results. It's a relatively new business. We've been listed for just short of 5 years, and certainly in the first few years, there was a lot of investment that went into establishing the infrastructure. Pleasingly, in the last 12 months, we've now demonstrated that we are able to fulfill the business plan, and we've moved to a positive EBITDA result for the half of 2.14 million. Now, that was a 33% increase on the prior period. Our operating cash generation, cash flow positive to the tune of 2.3 million. Revenues up 21% to 35.6 million. And our cost of doing business has improved during the period, during the half, by 86 basis points. Increasingly, as we go on and increase our revenues and our gross commission income, you'll see that there will be continued improvements as we derive those economies of scale from our growth. Statutory net profit, $1.25 million for the period. And we also have, importantly, 3,500 properties under management. That's an important part of our business where that generates recurring income. And really what we're saying there is we're managing circa $3 billion for Australian property investors within that property management portfolio. It's critical because it does provide that steady income throughout the year, but most importantly, it gives us an underpinning of our sales business as well, because a number of those properties that we manage, of course, come to market when the investors are seeking to either sell and move to another one or sell their property holdings. So that, again, is an important additional income stream to our business. Thanks, Tim. Our balance sheet has been critical for us, and we've made some significant gains in that respect during the last 6 and 12 months. The chart on the right-hand side shows our net debt or cash now position, and you can see that there's been a dramatic improvement to be in now net cash position after being the opposite over the last couple of years. We have borrowings of just $5 million and a $3.3 million convertible note at the moment. Importantly, on this slide, moving to the chart on the top left-hand side, we have net assets of 6.3 cents per share. Now, those net assets are comprised from our cash balances as well as our rent roll asset that I was talking about before that is conservatively valued. That 6.3 cent net asset backing is a significant premium to where the business currently trades. Thanks, Tim. Now, moving to outlook, gosh, it's been a frenetic start to the year with so many different factors impacting, obviously, consumer sentiment and also the real estate market. It's also a very, very hot topic for so many people in Australia because residential property is a very, very attractive thing for people. It's almost a national sport. We expect, in terms of transaction volumes, probably a similar volume. We certainly forecast that for 2022 compared to 2021. We're expecting now over the next few weeks, moving into a late Easter and then going into a federal election, we're expecting that volumes will drop off a little bit over the next month to 2 months. But then following the conclusion of the election period, we'll see a rebound back into similar volumes that we saw in 2021. In terms of prices, something that's dear to everybody's heart, we had a significant year last year, the Australian industry, where we saw circa 24 to 25% national gains. We're expecting a very much more moderate outlook this calendar year, and we would expect across the nation growth in the vicinity of 4 to 6%. Indeed, we've seen in the New South Wales market of Sydney, the Sydney metropolitan market, that has led in terms of a reduction. It's been the first market that's reduced over the last month by 0.2%. This is a healthy thing we see for the real estate market. We're also going to continue to focus on new geographic regions. I mentioned our market share, circa 1%, and we're looking for opportunities to roll our business into markets that we're currently not. Prime examples of that would be South Australia and Tasmania, terrific real estate markets, but importantly, further geographic reach into the markets that we're currently in as well. We are seeing very strong growth in our agent numbers, which leverages us very well to increase revenues. And as I mentioned, circa 30% for this financial year, as the communication and understanding of our new contemporary business model is more understood by the Australian real estate industry, we're seeing more people interested in joining our business. Of course, we're always looking to optimise our business in terms of technology. We're not a technology developer, but because of the scale that we have in our business and the increasing scale, we do have the opportunity to work very, very productively with a number of the prop tech service providers to ensure that our team remains at the forefront of the tools that are available to them to make them more efficient and their businesses obviously more productive. That's the outlook that we see. We're excited about that. We're excited about the growth levels, and we're excited about the reception that we've had in terms of our vision about how the Australian real estate sector can be serviced by our contemporary business model. Delighted to answer any questions that you might have.
Thanks, Geoff. We've probably only got time for one, and then there's 2 or 3, if you don't mind answering those directly. Let's just talk about the competition, right? They do have a lot of flash offices. There's one down the road, but can't they simply compete by closing their offices and also offering agents the same sort of commission cut that the agency does?
Yeah, Tim, look, the Australian industry is dominated. It's highly fragmented and it's dominated by those large franchise groups. Those franchise groups, by their nature, have existing and long-term franchise agreements. And because of that, the franchisee owners in those businesses aren't able to simply walk away or terminate their franchise agreements and adopt a direct model. They have the tail of their franchise agreements to serve out. So in that respect, we're very much more nimble than the vast majority of the Australian industry. Also, importantly, because it's fragmented, we see some tremendous consolidation opportunities available in the marketplace. I guess the best analogy there would be Bunnings, where those of you that are old enough might remember going to the corner hardware store to get some hammers or nails. That's pretty much been phased out with the consolidation and Bunnings being a large player. But important with consolidation, they've actually managed it very well, because instead of getting a diminution of service, the customer service there through aggregation has actually improved. That's what we see as being an enormous opportunity for the agency in, I guess, the large number of these franchise owners realising that they just want to be selling real estate. And they can do that within our business without all of the attendant flash offices or high operating costs.
Okay, Geoff, unfortunately, that's all we have time for. There's a couple more questions, if you don't mind answering those directly. We have to move on.
Thank you very much.
Thanks, Geoff.